Here we are again at the TRADER24 studios. With the US now seeing an unbelievable 9.1% inflation figure for June, both up 0.5% month on month and above what the market was expecting at 8.8%, things got even tighter at the macro level. The Fed's involvement in raising benchmark interest rates is expected to be even more aggressive, perhaps by 1 percentage point, at the same time as the US currency is hovering about 20-year highs and gas near all-time highs. Lastly, the freight market is under pressure. Gold and silver are plummeting, to everyone's surprise in such an inflationary environment, and the government bond market remains pressured, with institutional portfolios leaning towards cash holdings. You're watching the TRADER24 Global Market Overview. Let's take a closer look at the situation. On Wall Street, the new and very large rise in inflation to 9.1% provided strong volatility, with investors surprisingly managing to pick up early morning losses, and from minus 1.3% on the New York Stock Exchange index, the regular session saw controlled losses of minus 0.38% to 14,640 points after 14 sign changes. In the last 6 months, the index is down 16.91%, and the medium-term trend is obviously down. S&P 500, Nasdaq, and Dow Jones closed with modest losses, minus 0.45%, minus 0.15%, and minus 0.45%, and with extended battles around the flat line, especially after the release of macroeconomic data, where the bets in favor of anticipating the news were many. Only two S&P sectors closed positive: staples and consumer discretionary, with industrials at minus 1.22% and financials at minus 0.97% having the largest losses. The picture was better but negative in the small cap, with the Russell 2000 at minus 0.12%, while the VIX Risk Index also lost 1.72% to 26.82 points, closing the gap of bets in favor of the decline. The main negative protagonists in large cap were Fastenal minus 6.44%, Old Dominion minus 5.13%, and Delta Airlines minus 4.47%, while in the technological sector, Atlassian had a poor performance, minus 8.70%, Zoom minus 6.46%, and Illumina minus 3.62%. In the pre-market now, most listed companies are hovering around unchanged, with the Chicago futures not giving clear direction, with plus-minus 0.2% signs, at least for now. Asia closed in positive territory with controlled gains. The Hang Seng registered plus 0.24% to 20,838 points, breaking the downward streak of the previous 4 sessions, boosted by positive export results, which saw 5-month highs, thanks to the resolution of supply chain problems from the recent lockdown. At the same time, investors eased their defenses after the central bank said that domestic liquidity is sufficient in the first half of the year, pledging to continue to support economic growth by avoiding significant interventions in the benchmark interest rate. The Japanese Nikkei closed 0.80% in the 26,700 area, and the TOPIX closed plus 0.20% at 1,890. Finally, the Australian 200 saw gains of 0.30% to 6,640 points, with the labor market there setting a record low unemployment rate of 3.5%, down from an unexpected 3.8%, a level not seen since 1974. Europe's markets record control losses on the major stock exchanges. The DAX and CAC 40 at minus 0.30% and at intraday lows, while the 50 and 600 Euro stocks at minus 0.51 and minus 0.45% respectively. The biggest losses were recorded by UniCredit at minus 3.58%, followed by Fresenius at minus 2.94% and Enel at minus 2.26%. In the Athenian Stock Exchange market, Greece is at plus 0.44% in the general index and plus 0.62% in the large cap 25, with PPC leading the large cap with a gain of 2.55%, while the bank index is also in positive territory at plus 0.68%. In U.S. Treasuries, sellers took it in stride after a flurry of selling in recent days, leaving the 10-year yield at 2.90%, 50 basis points below local highs, with that of the 30-year falling to 3.07%. The interest rate curve flattened again with a 2-year around 2.9%, while in Europe the German Bund is at 1.15% yield. The spread of the Greek is estimated at 234 basis points, with a respective treasury spread at 182 basis points and the gilt spread at 94 basis points. In the forex market for the 55th hour, traders honor the parity of the Euro-USD, enjoying this rare spectacle and making history. The strengthening of the US currency continues in other currencies, with the DX index standing at 20-year high and above 108.5 points. The pound now stands at 1.1830 and the Swiss franc at 1.0160. The yen-dollar exchange rate is also at 24-year high, above 138.50 yen. In commodities, the problem of very expensive gas remains, with TTF at 176 euros per megawatt hour and Henry Hub at $6.65 per million thermal units. Crude oil continues below $100 after recent pressures, being at quarterly lows. And while the catalyst appears to be the ever-decreasing demand, EIA highlights that production is down by 80.7 million barrels per day, a pace we saw only last July, accelerating recessionary fears. Moreover, the problem of the U.S. attempt through Biden to artificially increase production by seeking agreements with oil producers remains, and on Friday he will again go to Saudi Arabia for this purpose. Gold and silver continue to be under pressure, with the latter having lost $19 per ounce, while the traditionally deflationary investment instrument has failed to prove its worth, being below $1,725 per ounce level, always in negative territory and far from the highs of 2060 a few months ago. In agribusiness, cotton saw a 42-week low of $94.25 per pound, with a USDA calling for 1.5 million bales for the 2022-2023 season, at the same time as imports from China and Bangladesh have fallen dramatically. Sugar hit a 5-week high at $0.191 per pound. Wheat lost $8 per bushel, approaching 4-month lows, while corn saw a 5-week low at $7.3 per bushel due to the USDA's new pessimistic supply expectation report. Finally, in the freight market, the Baltic lost 0.6% to close at 2,002 points, with the Panamax closing negative for the 17th session with a 4.2% loss, and the Supramax remaining at a 5-month low, finally breaking its 14-session downward streak of 3.8%. In terms of economic releases, today we expect the results of the U.S. Producer Price Index for the month of June, with forecasts suggesting that the index will stabilize at the same level as in May. At the same time, the weekly results of the number of unemployed in the U.S. are expected, where forecasts show that the number will remain at the level of 235,000. Yesterday's U.S. Consumer Price Index results impressed negatively, with inflation hitting 9.1%, a new 40-year high, apparently up 0.5% month-on-month and much higher than the already higher expected 8.8%. Energy prices account for an astonishing 41.6% of the basket, a figure not seen since 1980, with oil scoring a magical plus 98.5% on the index. The structural CPI remained at 5.9%, down slightly from the local high of 6%, also above expectations of 5.7%. In terms of corporate announcements, today is the ex-date of Abbott's dividend with a yield of 1.74%, up 18.9% year over year. And today we also await JP Morgan's financial results, where forecasts call for $2.94 earnings per share and $31.82 billion in revenue, up 10.5% and 3.4% respectively on a quarterly basis. Delta Airlines yesterday reported financial results with $1.42 earnings per share and revenue of $13.82 billion. Yesterday's CPI announcement brought the cryptocurrency market down sharply and collectively, but it seems to have recovered in the last few hours and is moving steadily upwards. The Bitcoin managed to break the $20,000 barrier after 6 days of trading in the $19,700 range. After yesterday's CPI announcement, it recorded a sharp drop of 4.5%, which however recovered in the following hours and is currently trading just above $20,000. Ethereum was on a similar path, which just before the announcement almost touched $1,100, then fell rapidly to near $1,000 and is now trading near $1,100 again. Yesterday's big gainers also included Aves DeFi protocol token, which rose 13% after Celsius made a debt payment, and Polygon, whose token Matic rose 11% after it announced that it had been selected by Disney to participate in its accelerator program. Thank you for joining us today. It was the Trader24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.